Welcome to Digital Asset News. Take your top stories in cryptocurrency digital assets and break them down to bite-sized pieces today. Exciting stuff. First up, Citibank executive says Bitcoin will trade at $318,000 by the end of 2021. And at first glance, it looks pretty ridiculous, but we've already talked about this in a previous video called 500K Bitcoin, and the results aren't that far off. Also, pretty good article on Cointelegraph talks about Bitcoin chose decentralization and immutability over payments, says Fidelity executives. This is a great piece because it goes over the 6 misconceptions about Bitcoin, but there is one thing. Bitcoin is not great for everyday use. And more great news, SEC Jay Clayton Head will step down as the US SEC chair by the year's end. And I got to tell you, it doesn't get more bullish than that. Lastly, we'll go over Q of the day where I talk about Celsius being a scam and what I said on Twitter. So again, all that great stuff. First, go over what's going on in the markets today. It is 10 a.m., getting started early, Monday, November 16th. And usually Sundays aren't that great for crypto because things start to take little dips as people take profits and trade out and do all their little magic. But on Monday, we start to see a little bit of rebound. And today, it is no different, and it's a great Monday because Bitcoin, 2.6%, almost at 16.5. Maybe we can hit 17K. Who knows? Quite the rally the last month. It's been up 6% for 7 days. So all you Bitcoin holders, whoever you are, me and myself and I, congratulations, did pretty good. Ethereum up 0.6 at 458. I was watching Hashoshi, and he was talking about how Ethereum 2.0 may be delayed. It's an interesting piece. I just watched a snippet of it. Smart guy. And he just talks about how they want a certain percentage or a certain number of Ethereum to be staked. And right now, it's only 10% of the total that they actually need or want. So go ahead and check that out. But I'm like, oof, that's never good for Ethereum if they're talking about delays yet again. Anyhow, Tether, almost at 18 billion. So great. Tether's printing money like crazy. XRP, hey, look, XRP almost might hit 30 cents, 11% for 7 days. So congratulations, XRP holders. Looks like you're really up. And yeah, Chainlink 2%. Litecoin is the big winner for today, 13% up, 16% for 7 days. I think people are just warming up to the talk about what Litecoin is, how it fits into the whole PayPal process, and people are actually getting into it because really, if you take a look at it, it's Bitcoin, Bitcoin Cash, and Ethereum. Litecoin is the cheapest one. So if you're looking at getting into cryptocurrency, this is the same thing that people talked about in 2017. Well, if everything's going up, why don't they just pick the cheaper one? Because maybe that'll be the next Bitcoin, and maybe that's why people are picking up Litecoin. Who knows? Bitcoin Cash up 2.5% for USD coin. Let's go down. Let's see what really 7.4% for what? Ethereum Classic. Have fun with that. Look, if you're a fan of Ethereum Classic, that's great. But I think they've had 51% attacks. I'm not touching that with a 10-foot pole. Let's see. Waves is up 12%. Congratulations, Waves holders. I've heard good things about them. Need to do some research. Looks great. 8% for Doge. Whoever holds Doge, congratulations. I like that project. I think it works pretty well. Started off as a joke, but really it does pretty good things. Let's see, 2.4 for, hey, Digibyte, the thing that I really need to do a video on, I never always talk about, never do. Digibyte, congratulations. 11% for Zilliqa. If you don't know, Zilliqa is doing staking right now, and the staking percentage is like super high. I think it's like 22 or 29%, something crazy. Dave over at Crazy for Cryptos talks about it all the time, and maybe it's something I should take a look at. Qtum, what? Quant, 5.8%, that's great. Hedera Hashgraph. If you don't know Hedera Hashgraph, it is one of those like super smart type of projects that people should really take a look at and really get into. I don't know if it could be the next big thing, but the prospect of what it could do is pretty powerful. It's just seeing if it actually do it. And again, as far as like businesses go, you can have the best product in the world, but it doesn't matter unless people actually use it and want it. Look at McDonald's. It's the worst place to eat of all time, yet it serves billions every day. So let that sink in. Sushi, 123% for 7 days. What the hell is going on? 12% up. Yeah, have fun with that. See if that crashes again. And that's really all we're talking. What? Hey, empty set dollar. I don't know what that is. 17%, 16%. Who knows? I don't know. Elron, people talk about how great it is. It could be. Looks like another smart project. Again, let's see if it can actually make it. But again, a lot of good businesses don't make it, even though they've got a great product. And Curve DAO token 6.3. So that's your top 100. Let's jump into today's top stories. So first up, this is good. Citibank exec says Bitcoin will trade at 318,000 by the end of 2021. So if you're holding Bitcoin, 2021 could be your year. Look, I don't know if that's what it's going to be, but I can tell everybody that 2021 is definitely going to be a great year for crypto and digital assets. I could be wrong, but I felt that for quite some time, and we'll see if it actually plays out. But I think it's going to be. So, writing a report titled "Bitcoin 21st Century," Fitzpatrick, the author, makes the surge argument for Bitcoin. He says the digital gold's current trajectory appears to be similar to that of gold in the 1970s. I'm a big fan of history, and I kind of think like what happens before is going to repeat and happen again. So this was interesting to me. He states, before structural changes were implemented in the early 70s, gold had spent 50 years of trading in the $20 to $35 range. I did not know that. Interesting. However, after changes were instituted, gold surged. It recently touched a new all-time high in August of around $1,900 per ounce. So imagine, you go from 2035, what we're talking about, 30, 40 years ago, and now we're looking at $1,900. So, I mean, given inflation and everything else, I mean, you can put that into account, but still, it's a marvelous run for gold and all the gold bugs. No wonder they're always talking about it. But do you really think gold can go 10x and go from 2,000 to 20,000? No. There's not a chance in hell it's going to happen. So I could be wrong. Let me know in the comment section, but I don't see that ever happening unless there's like massive inflation, but who knows? States with the COVID-19 pandemic still hemorrhaging economies around the world, governments will continue to responding to the crisis by printing more money. This in turn will benefit safe haven assets which perform well in inflationary periods. So spoiler alert, they're going to keep printing. And also with Joe Biden as a president-elect, if you think that Trump still has a chance, sure, whatever. But if you think that Biden won't keep printing money and then the Federal Reserve won't keep printing, you're delusional. It's going to be money printing out the wazoo, and we're going to see a ton of money come into play. And we'll see how it all works out. But again, as money gets printed, it really benefits the top because the top people now have all this money. And then when it gets disseminated into the lower class, to the middle, upper middle, lower class, that's when it starts to depreciate. So I don't think this is going to be good for the economy in the long term. Short term, yeah, I mean, we need a little stimulus, especially with COVID-19 coming back, roaring to life. I'll be going back to El Paso in a couple of weeks. We'll see how that works out. The hotbed, the hottest place in the country with coronavirus, but got to go back. So we'll see. But again, printing money is good for gold, silver, digital assets, cryptocurrency. And Fitzpatrick notes this: gold has restrictions such as storage, non-portable, and can possibly be even called yesterday's news in terms of financial hedge. Bitcoin is the new gold. Bitcoin is digital gold. It's finite, only 21 million. We're not going to find more Bitcoin. We're going to find a lot more gold as time goes on. We're not going to find more Bitcoin. I can send it to anyone, anywhere in the world in less than 30 minutes for next to nothing. Also, it's the best performing asset class ever. It's outperformed all stocks, oil, gold, silver, ever. So used to cost a penny or a nickel. Now it costs almost 17,000. That's why I'm heavily invested. And that's my Bitcoin elevator pitch. Anyhow, to support his view, Fitzpatrick says the same thing that I say, which is limited supply, ease of movement across borders, and opaque ownership. Or you can see who owns it quite easily by just taking a look at the blockchain. Consequently, Fitzpatrick believes more investors will choose Bitcoin over gold as a result, and I believe that to be true. And it'll take some time because really all the wealth in America, I don't know how it works out in the rest of the world. I assume it's the same way, but it's in the hands of the older population. We call them the baby boomers here. Matter of fact, they have the vast lion's share. So this is the percentage of U.S. household wealth by age of generations median cohort, or what they actually own. So you got millennials not looking too hot. Gen Xers, not too bad. Baby boomers, far and away the biggest. But so they are the older generation. They are used to what they are used to, which is gold and silver, so on and so forth, stocks. So they're going to hold on to that. But as time goes on, it'll flip over to Bitcoin. It just only makes sense. And to finish up, unlike other digital currencies, such as central bank digital currencies, CBDCs, Bitcoin cannot be confiscated, therefore making it a more secure asset. Also, CBDCs are centralized, so you can shut them down at any time. So that's what we got for that one. Pretty interesting piece there. But again, check out that video on 500K Bitcoin. One of the things that we took a look at was the circulating supply and the market cap, and what the actual market cap would be for 500,000. It came out to $9.5 trillion, which seems like a lot, but if you take a look at the global amount of money, just gold itself has 12 trillion. So I'm just saying, if it just eats up a little bit of gold, a little bit of currency, a little bit of tokenization, a little bit of store of value, put this all together, and 500,000 is not that far away. So before I was like, that's ridiculous, but now I'm like, that seems okay. I have a conservative view of 150,000, but anywhere from 150,000 to 500K, hey, I'm still pretty happy. Let me know what you think in the comments section. Let's move on. Next up, Bitcoin chose decentralization and immutability over payment, says Fidelity. This is a really good article where if you really want to get into the meat and potatoes of what makes Bitcoin Bitcoin, this is really good. And it lays bare some interesting points and some things that people have held to, which are totally false. So the first one is this: Bitcoin has failed as a means of payment. I know I will get crucified in the comment section, but it has. You can't use it as payment. Have you tried to use it as payment everywhere? I mean, right now, I think maybe you get away with it for small things. But first of all, why would you want to? Like, just as we just took a look at before, take a look at what Bitcoin is or where it's at now and where it could be. Why would you use it as currency? It doesn't make any sense. And then also, as more people start to buy into it and get into it, especially 2021, it'll be the same thing as like 2017, which I always talk about. It gets super slow. It gets super expensive. Transactions per second are like minimal. So again, it's not a means of payment. It just isn't. It could be a store of value, and that's why I think people are buying it up. But I don't see it as a means of payment. Let me know where I'm wrong in the comments. I'd love to hear from you. And let's keep going. So the currency is outperformed, Fidelity accepts, by conventional payment rails like Visa, MasterCard, and PayPal, all of which can offer high throughput. And when they say throughput, it just means transactions per second, or TPS. And what they're talking about here is when you run your Visa or your MasterCard or debit card or whatever else, how much can it actually process per second? And this is an older chart, but it still holds true today, roughly. So Bitcoin has between about 7 to 12. So 7 to 12 transactions per second. Ethereum 20, Dash at a blazing 48. Litecoin, hey, this may be one of the reasons why it's going up. It's at 56, so pretty good. Bitcoin Cash is doing pretty good here at 60. So that's what their whole argument is. Like, hey, we're here for currency and we have 60 transactions per second. Sure. PayPal's 193. All right. Ripple has 1,500. And it should be XRP. I don't know why it says Ripple, but it's an old one. And then Visa is at 24,000. Visa has also claimed 150,000 at one point. So we'll just average it out. Maybe it's at 50,000. But just to look at transactions per second, that's a lot. And for Bitcoin to hold up, it's not going to happen right now. I know people will talk about secondary. What about the Lightning Network? Well, it doesn't work that hot right now. So maybe in the future, just not right now, it can't hold up. If everybody in the world used Bitcoin, it would crash in a heartbeat. Forget the world. Let's talk about like one nation. So let's just take Canada. If Canada did, it would crash. So moving down, there's another thing that I failed to mention, which was Bitcoin's tax definition as property in some jurisdictions, meaning that users have to calculate gains and losses for every payment or purchase in Bitcoin, renders it impractical for many payments. So that's another thing. So if you really wanted to use Bitcoin everyday purposes, you would have to calculate that for taxes as losses and gains at the time. So let's say you bought today at 16.5 or whatever it is, and then later on today you buy some coffee or you buy a car. I don't know what you're buying, and now Bitcoin is at 16.7. Well, I guess a car would be okay because it's not like you're going to buy a car every day. But for everyday use, you'd have to calculate every single transaction you would do, and then you would have to put it into the IRS or wherever you're at, Canada central government. So again, this wouldn't really work out. I mean, you could if you really like to do your taxes that much. I hate doing taxes, but I have to. Further on, it states the coin's design has prioritized aspects such as decentralization, finite supply, 21 million, and immutable settlement, meaning you can't change it because there's so many nodes. There's thousands. I think there's like now tens of thousands of nodes throughout the globe. So you can't change them because they are on each node, and they will find out if you try to not to do that. So that's the whole thing about immutability. Also, no central bank or government can step in to support or prop up markets and artificially subdue volatility. So that's what's great about Bitcoin. They can't step in and prop up the markets like the Federal Reserve is doing right now with the traditional markets or the stock market. That is propped up totally, solely by the Federal Reserve. If they weren't injecting so many things and buying so many things, it would have crashed a long time ago. Bitcoin's volatility is a trade-off for distortion-free market. True price discovery, accompanied by volatility, might be preferable to artificial stability if it results in distorted markets that may break down without intervention. So really what they're trying to say here is that there's going to be volatility until we discover exactly what the value of Bitcoin is. There's some price discovery going on right now. Is Bitcoin worth 3,000 US dollars, or is it worth 500,000 US dollars? Well, we'll figure it out. And as time moves on, there will be less volatility. Just right now, expect volatility. Let's just be honest. It's going to be pretty big. Like what? In March, just 8 months ago, we were at below 4,000. Today, we're almost going to hit 17. So I would think that's a little bit of volatility. So those are just my thoughts on that one. And then it goes on to say that there's a couple more things in the report that I didn't mention here. So I was like, well, what are those things? Because I want to know. The things we just talked about were interesting, but there was 3 more criticism. I think 4 actually. And criticism number 3 is that Bitcoin is wasteful. This is exactly what Brad Garlinghouse, of the CEO of Ripple, states. He says, hey, Bitcoin is super wasteful, and when Joe Biden comes in, he's going to clamp that down because they did not like to have waste, or they trying to do renewable sources. Well, here's the response. A substantial portion of Bitcoin mining is powered by renewable energy, or energy that would otherwise be wasted. Additionally, the energy the Bitcoin network does consume is valid and important. So at first people were like, okay, well, what's the number? So here's the numbers. The Cambridge Center for Alternative Finance, or CCAF, estimates 76% of miners use renewables, especially hydroelectric power, as part of their energy mix. So if you're looking at where mining pools are, they're mostly in China. Not that the miners themselves or the mining rigs are in China, the mining pools. And a lot of those pools, they are using renewable energy such as hydroelectric power. On top of that, you've got Layer 1 in West Texas, and they are going to be doing a massive amount of Bitcoin mining. And why is it in West Texas? Because renewable energy is super cheap, because it's super windy, and that is renewable energy source. So that's another prospect of that. And there's a new piece I had no idea about. It says more recently, mining operations have been set up to power Bitcoin mining with stranded gas. I'm like, what the heck is that? So stranded gas is a natural gas that is limited utility and is likely to be wasted in oil or gas while it does not have the pipeline infrastructure needed to transport the gas is considered standard. Stranded gas is flared or burned in the air or vented, allowing to escape in the air. And that's when you see, like in the mining rigs, where like there's just a big blow off, stranded gas. Sure. So they're using something like that, which will already be wasted, which pollutes anyhow. So I mean, you're going to pollute. But in all honesty, Bitcoin is still going to be a little bit of wasteful, and that's what they talk about here. So they are going to use non-renewable energy sources, but it is what it is. So when people start to talk about like, well, it's super wasteful and it's 100% and just use dirty coal, debatable. And this is one of the reasons why. So another one was Bitcoin is used for illicit activity. This is just stupid. I'm not going to go too much in this, but it states as a share of total transactions, Bitcoin transactions connected to illicit activity are very low. Of course, we all know that the number one currency used for illicit activity is the US dollar. So just that's what it is. Criticism number 5, Bitcoin is not backed by anything. And this is what you're going to hear when you start to talk about your friends and family, especially in 2021 when Bitcoin really explodes. So they're going to say, hold on, Bitcoin's not backed by the US government. It has no utility, so it's just made out of nothing. You're like, no. It's Bitcoin is backed, or Bitcoin is value because we say it has value. Gold isn't backed by the US government, but yet it still has value. Diamonds don't really have utility. They just look good in a ring, but they still have value. Your digital movies and games that gamers play in their specified games, they have value, and yet they don't really exist. So when you talk about Bitcoin not having value, so what else you got? Bitcoin has value because we say it has value. And for all the things that we talked about, it is permissionless, it is decentralized, it is immutable, it is transferable, it is finite. These are the reasons why. And also, we have a consensus and we give it value because we say it is. And it's not just me and you that give it value. There's millions of people around the globe that says it has value. So there it is. And lastly, Bitcoin will be replaced by a competitor. This is the biggest one that I think that I get on the channel. Well, Bitcoin is old and slow, and it's the Netscape navigator of browsers. Let's just upgrade to Google Chrome. And it's a valid point, actually, because really, if you think about it, Bitcoin is old. It's like 13 years old, and it is slow. We just talked about how slow it was. But one good thing about being old is it's battle tested. And when you're going to invest into something, sometimes you don't want the newest and greatest and latest things. Those are for like the super early adopters. When people want to look at like what is a little bit more stable, well, this has been around for over a decade and it hasn't been hacked. It looks pretty good. And then also another criticism is, well, we can just fork a fork of a fork and we just get some more Bitcoin. We can get Bitcoin tomato or whatever. It doesn't matter. But the whole thing is that, well, yes, you can fork it. It's an open source software. A fork of a fork is about to happen, or just did happen actually. I think Bitcoin Cash just forked. I don't think ABC is going to last, but whatever. But that's not the point. It's the community and the network effects. It cannot be altered. So even though that we can have Bitcoin and then Bitcoin Cash, when you get to Bitcoin Diamond and Bitcoin Potato and Bitcoin Possum, those don't exist. I mean, well, one of them actually does exist and just kind of went away. So it all depends on what actually has value, what has utility, what has use, and what people say has value. So let me just think in the comment section. Let's move on. Next up, and I'll make this very quick. This is a good day. This is a good day. Not that I have anything against Jay Clayton. I'm sure he's a nice guy, family man, sure. But doesn't like cryptocurrency, and that's not good for me. And if that's not good for me and you, why do we want him in there? So Jay Clayton will step down as USC chair by the year's end. That's great. Hopefully we can get Hester Pierce, crypto mom, in there, and she can be the new chair. That would be awesome. So Jay Clayton will be leaving the agency by the end of 2021. And when I read this, I'm like, whoa, whoa, whoa. By the end of 2021 or the beginning, because this doesn't make any sense. Year's end, well, I guess that is the year's end. So I had to take a look and just double check. Over on CNBC, it says Jay Clayton says he will step down early as head of the SEC at the end of 2020. So we're looking at 2 months, a month and a half. So when I first read this, I'm like, that sucks. That's like another year and a half or a year and some change. But no, it's going to happen quickly, and that's good for us. As chairman, just a little bit of a history. Clayton also warned that Bitcoin investors last year that they would be sorely mistaken in expecting the crypto should be traded on mainstream exchanges without more robust regulation in place, and pretty much would just poo-poo all over it. Not every chance he gets, but he wasn't a really big fan. So it was kind of shocking when the SEC came out and said, hey, we're going to allow banks and all these other authorities and everybody really to be custodians of Bitcoin. So big institutions can now be their own custodians. And I thought it was interesting because I'm like, wow, that's a kind of a reversal of what they were really planning on. So so we have the SEC saying they can be custodians. We have the OCC saying they can be custodians. And then we got the banks in the middle going, we're not innovators. We're not going to do that. But it just goes to show you that it is good that these governmental agencies can actually be a little more forward-thinking. Banks, what are you going to do? So really that's it. And the article doesn't talk about who is going to replace him. It does talk about where Jay's going to go, which I really don't care. But who's going to replace him is the big question. So let me know who you think could or should replace him in the comments section. Let's move on to our last piece, which is Q of the Day. So in Q of the Day, I had sent out a couple of tweets, this was the Leah Halpern show. And she asked a great question to Alex. She says, how can crypto companies pay 10% interest when banks are offering practically nothing? And Alex answered the question, kinda. I mean, he pretty much says that banks can make 17%. They don't give you guys squat, but we give you guys a lot. So I just said, hey, is Celsius a scam? To like have people who think it's a scam watch it and go, oh, it's, seems legit. So then people were like, oh, so what, you think it's a scam? I'm like, did you watch the video? So then I had to clarify it and said, hey, do I think Celsius is a scam? No. And have there been some errors? Yeah, there have been. So this was really the big question. And I want to really clarify some things about why I still have taken my portfolio from 30% in Celsius down to 10%. So let's jump in. All right, everybody, welcome back to Q of the Day. And this was a good one. This was something that I had talked about in my previous video where I talked about Celsius Network and my plans. And if you don't know what it was, I'll just give you a quick recap. Celsius, they had a switchover. They did what's called a DNS propagation, where they had to upgrade their services on GoDaddy. So when you do that for DNS propagation, sometimes it takes 24 hours, sometimes it takes 72 hours. I've done that on both of my websites, and it took about 24 to 36. But it is kind of harrowing because everything goes down. And they tell you it's going to go down so you can let your customers or members know. So me personally, when I went to upgrade, they said, hey, it's not going to have access for quite some time. So you need to tell everybody. Sure. So I told everybody 1 week out, 5 days out, 3, 2, 1, the day of, 36 hours afterwards, when it was up, and then of course answer any questions. And that's just me being a small business owner. So when I saw what Celsius did, I was a little bit concerned because they are a multi-billion-dollar company. So I don't look. I will just say this: no company is 100% perfect, right? There's nobody that is infallible. But for me, when I looked at this, I'm like, well, it's kind of a big mistake, and it's one of those mistakes that they shouldn't have made. And if nobody told them at GoDaddy that this would happen, it doesn't really matter, because the people that are required or actually are there to change everything over, they should know these things. And then also as far as like the security team, because it's one of those things as far as security and customer information, they should also are aware of what actually happened. And I know people will say, well, it doesn't really matter because it's not the cryptocurrency isn't on the website, it's not on the app, it's on the blockchain. That is all true. However, you don't want some kind of data leak going on, and which is what happened with other companies. So as far as the security team, of course, they were involved and they did the right thing. They didn't open it up very quickly. However, I think they should have known. So it's just one of those things where it's a breach in trust. That's all it is. And so when I said on yesterday's video I was going to decrease my portfolio in Celsius, people were not too happy with me because they're like, well, how can you do that? And you should really believe in that. And this is, just a little glitch, so not a big deal. I'm like, wait, it doesn't matter what I do. It doesn't matter what I do. If I do something like that, then that's just me and what my thoughts are. That does not affect you. So if you want to keep 100% of your cryptocurrency assets, that's fine. Go ahead and do that. But for me, I just really thought back and go, 30% is kind of a high number to keep on any one centralized platform, because you never know. And then some people say, well, it's DeFi. It's not DeFi. It's centralized finance. That's exact. And even Alex Mashinsky will say it's centralized finance. And yes, there is insurance through Celsius, but it is FDIC insured for your fiat. And when your cryptocurrency is there, then they also have a form of insurance. However, when they lend it out, which is the whole platform, and Alex will tell you this as well, when they lend out that cryptocurrency, there is no insurance. So if something happens, then that's it. Now, they do ask for collateral, and that's great. So like if you want to borrow $100, you got to give $150. Well, essentially, that's really how it is. But we have seen instances where other places have said the same thing. We have collateral, and all of a sudden just didn't really work out. Now, there is one bright spot I will say about this. Not one. Celsius is probably far and away the best out there that I've seen. And I know people will say, well, what about X? And what about Y? And what about Z? I don't know about X, Y, and Z. And the ones that I've looked at are not that great. So when we take a look at the history of what has happened, all we have to do is look back to March, when the whole pandemic started and there was a huge crash for Bitcoin and all the crypto assets out there. And during that time, there was and this is the whole trouble that started with cred. Once that happened, people were like, we can't pay back the loans because we are overextended here and overextended there, and it became a huge mess. So with Celsius, that didn't happen. They said, well, we have, the collateral. And unfortunately, at that time, the crypto collateral went down so far. They're like, hey, you either have to, pay back the loan, or you have to start collateralizing more so you can keep the loan. And out of all those things that happened, they only had to liquidate either 3 or 4 people. I forgot how much it was, but it was a very low number. And that is kind of like your benchmark as to how well a company can do. I mean, everybody's awesome when the money's rolling in and there's no problems whatsoever. Okay, look at Bernie Madoff. It was working pretty great for that whole time. But when the waves start to crash, or when the tide rolls in, you can see, or the tide rolls out, you can see who is left swimming naked. So it's one of those things where it's like, well, Celsius passed that test, and that's one of the bigger tests that I can think of that may or could happen now or in the future. So it's a pretty bright spot. However, going back to my thing, which is 30% of my entire portfolio on Celsius, some people say that was a little bit crazy, a little bit too much. Some people say that wasn't enough, but it doesn't matter what other people say. It's what you think and what you do with your money. So for me, I felt like it was a time for a little bit of a cool-off period, and I reduced from 30% down to 10%. Now, as time goes on and there's no problems and we see more things, then I will probably add back in. I don't see the problem with that. And then will I keep buying the Celsius token? Absolutely. Why wouldn't I? I mean, it's just going to keep going up for quite some time, I believe. Now, it could go down, but I believe in the platform and I believe in what Alex is doing. But, you know, I just think that it was time to just do a cool down and a pull back, and this is where I'm at. So hopefully that answers your question for today. Let's jump. That's it. So I hope that answers some questions for you about Celsius. Also, just a quick reminder, Dan Teaches Crypto, the free website is up. And again, we try to simplify everything as far as what is crypto, what is crypto good for, some different investment strategies, not that it's investment advice, but just kind of like the basic things that I find important and things that I think you could actually find important as well. So if you're looking for like the basics type of thing, this is probably the best place to go, on my personal opinion. It's danteachescrypto.com, and there is a link in the description, and that is it for today. So if you like those types of videos, there's gonna be too much gonna pop up on your left and right. Let YouTube do its magic. And that is essentially it for today. So thanks for stopping by. Really appreciate it. And then I'll see you on the next one.